What is up, everyone? So, before I do my technical analysis update, I know I haven't made a post here in a while. Just it's because I migrated to TikTok. So, if you guys have TikTok, feel free to check me out. Feel free to follow me on there. This is my TikTok page right here. This is where I do most of my posts, whether it's regarding personal training, mushroom cultivation and foraging, technical analysis, or investing and trading. And sometimes I post a little bit about gaming and about my family. So feel free to follow me on there, guys, if you haven't done so already. This is going to be from now on the page where I post um, my stuff. And and I will be doing a technical analysis update right now, so you guys have an idea where the market currently stands. So this is Bitcoin right now. The reason why I'm talking about Bitcoin is because it's correlated with the stock market right now. It's still pretty much a risk-on asset, so meaning when the stock market indices are down like 1%, this thing could be down like 5-10% easy. So really depends where the stock market is headed. Uh, to know where Bitcoin could be headed. But right now, this is your support. So if we take a look here, uh, make the screen a little bit bigger, your support are these purple areas here. So this is a parallel channel that goes back since October 6th of 2025. We hit it here. So we hit it up here on October 6th. We hit it down here October 17th. Hit it again up here October 27th, 28th. And we actually broke down a major trend line that goes back since 2011. So if we zoom out to the 1 week chart, this is the trend line that's kept Bitcoin up um, this whole time. So this could be a major turning point for Bitcoin. So these are the levels to watch in the coming weeks, coming months ahead. So these levels, yeah, you want to buy these levels, but you want to set your stop loss accordingly. So if I were to buy at 93,000, I would set my stop loss at 92,000. And then from there, there is some support at around 91,400. If that keeps going down, just watch out below. I would stop out if it goes to 88,000. There's more additional levels down here at around 86,000. So those are your levels for Bitcoin right now. And if 86,000 were to break, this is actually the measured move target. So all the way down to 78,000. That also coincides with the previous consolidation over here before breaking out. We even retested right here. So this would be second hit only, which gives us a high probability chance that it may get a bounce, but it will need to get back into this downsloping parallel channel, and eventually maybe even this midline, this parallel channel right here. So this midline, the parallel channel, is the channel that goes back since the 2017 top. We hit it here in 2021 before the before we pulled back, and then we hit this other parallel channel right here in November 8th, 2021 before the bear market. And this is actually what's keeping the price in check right now. So we could potentially go to as low as this 200-day moving average, 66,500 in the coming months if selling keeps continuing. Also, this midline, the parallel channel right here. And then if we take a look at the Magnificent Sevens, just so you have an idea of what's going on there, this is the YM chart. So this is the Dow Jones futures. So the Dow Jones futures broke two key parallel channels that goes back since April lows. It broke that recently. It also broke the one that kept the markets up since May 23, 2025. So we broke two levels and it's trading below it. So what you want to see if you're a bull, you want to see it go above 47,000. That would be first test. And the second test would be 48,000. So 48,000, that's a level that goes way back. If we zoom out to the 1 week chart, that's a level that goes way back since the dot-com bubble or the great financial crisis, actually. So that's a pretty significant level. It hasn't broken out yet. So We can't assume that just yet. And also the candle from last week, that looks very nasty, guys. After a huge sell-off from 2 weeks ago, and then that's the candle we get. Is This is not bullish at all. This looks like a topping tail, meaning it was able to go up to 48,528 briefly before closing all the way down to 47 cents, 47,229. So that's a reversal candle, which means there could be more selling in the coming days, coming weeks, and months ahead. And also the fact that RSI is overbought territory on the 1 month chart, or pretty much got close to it. And there's definitely negative divergence going on because the highest RSI was back here in 2018, and then we got up here, and this was higher price, but RSI was not as high as it was back in 2018. And then we even made a lower high but higher high on price, and then another lower high but higher high on price. So that's telling us that institutions are dumping while retail is buying. Another thing I wanted to show you is the VIX. So the VIX did get a pump last week, but we are already coming back in. That's telling you that there are people buying this dip. Um, so we shall see if this will keep continuing to go lower, in which case 17.21 would be the next level, and then 16.29. Those are the levels to go short the markets and go long the VIX. So as the VIX go lower, that means people are becoming greedy, but as it goes higher, people are becoming fearful. So you want to be buying when there's a huge spike on the VIX, and you can short the VIX, or you can be buying oversold stocks, um, or even you can even trade the indices, the Magnificent Sevens, whichever you like. And then this is the Russell 2000 right here. Russell 2000 also showing similar signs as the Dow. So it broke two levels recently, and it was trying to get back above it, but it failed. It did not get above it last week. So what you don't want to see is a sideways consolidation for a few days, because that implies that we're probably going to have another leg down. um, and then so these are the levels pretty much to beat for the Russell 2000. So it has a level here 24.25, followed by 25.25. And then for the Nasdaq, same type of deal. You want to make sure that this doesn't trigger this neckline right here, because it's more a head and shoulders. A lot of them are showing similar signs, like the Russell here. This almost look like a head and shoulders right here. The IWM, to be exact. This is the ETF, so it looks like there's a head and shoulders forming here. It hasn't triggered yet, so you just don't want it to break this parallel channel right here. And this parallel channel, um, it already broke two parallel channels. You just don't want this nearest term parallel channel to break. If that breaks, then we could be headed another 6% to the downside. The ES, or let's see here, we go through S&P. So the S&P right here is also showing similar signs as the Nasdaq. It recently broke two parallel channel that's kept it up since April and May, and it tried to get back above this first level of support, which is now starting to act as resistance. So 67.77 would be the level to beat next week, followed by the previous all-time high all the way at 69.34. So we'll see if it's able to rally up. If not, then this potential head and shoulders could trigger another 4.48% to the downside. And take a look at the dollar. The dollar is down. The stock market's not yet moving right now. Futures will start moving around 3 p.m. So we'll have an idea where the market could be headed. Dollar will start moving. The U.S. 10-year, I think that's in the pre-market tomorrow, 1 a.m. Gold, silver, U.S. oil will start moving. The forex industry will start moving. But right now, Bitcoin is telling us that the stock market might be gapping down just because of its price action. It's down, meaning the stock market could be down. If this was up all the way here, then that would actually be a little bit optimistic, but it's down, so that's telling us that stock market could be down. And then the Magnificent Sevens, this one is on a bear flag watch here. Apple, so down move, sideways consolidation, never took out the highs here. So that's your major level right now. And it's record highs, which implies that if this bear flag plays out, it's maturing. It's been over 7 days already. At some point, it's going to have another 3.95% move to the downside. Amazon just kept going down. It might be filling the gap here, 231 this coming week. Google is also on watch here for a potential move to the downside as it was trending lower last week. Meta has been beaten down here, oversold on the 1 day. There might be some bounce coming up for Meta if it keeps going lower from here. 531 is my target, so that would be a great level to go buy Meta. Microsoft is also on bear flag watch. As you guys can see, down move, and then it's now just trading sideways inside bar consolidation with this purple area here being technical resistance at this time. If this bear flag plays out, it could have another 10.88% move to the downside. Nvidia also broke two key levels. It broke the one that's kept it up since May and the one that's kept it up since April. So it tried to get back above it last week. I mean, Nvidia, the Magnificent Seven guys, is literally the markets because of the fact that they are multi-trillion-dollar names. They're literally the market. So when they're down a lot or up a lot, that tends to move the market. So the SMH, the semiconductor sector, the AI sector, they are, from what I heard, 90% of the U.S. GDP right now. So if, let's say, AI doesn't produce any profits, because consistently, then we will be in recession sooner than we think. And we are already seeing layoffs left and right now by big companies. So, these are alarm bells that we should be concerned about at this time. So Nvidia, it needs to be 193, 194 next week. That's gap fill right there. If we could get above that, then we could potentially retest previous all-time high. It could just bust through these levels potentially, depending on how the momentum goes. So Tesla right here also broke down key level that's kept it up since April. It's hit it multiple times. I think this is the sixth hit right here. So first, second, third hit, fourth hit, and the sixth. So the more you hit a trend line, the more likely it's going to break. And it did try to get back above the trend line last week, but it failed. So we'll see how this goes. It might just trade sideways for a little bit. Maybe it'll get back up, in which case it could retest previous all-time high. If not, then this could be bear flagging, setting us up for another leg down. Let's take a look at the commodities. So gold here, it almost had, it looks like it's had like a relief rally here. Almost hit the upper end of the parallel channel, but failed. And it's now caught support in the midline of this channel right here. So there is support at 40.24, but if that were to break, then it could keep going lower to 39.29. Silver is also it's formed a double top. So this thing could still come down to 49.39, all the way down to 48.95. And if that keep going lower, then this could be forming an M top. So 46.79 would be your next target for silver. Yes, silver was a great investment last year. It's literally doubled the price when I got in around between April, May, and August or September. I bought it in for like 25 an ounce, and it's now $50 an ounce. And gold, I got in when it was like, I think, almost $2,000 an ounce in 2023 in March. That was also one of my best long-term investments. But pretty much right now, I'm just trading the markets. So whatever's up significantly or whatever's down significantly, that's a great trade. So, that's really all I care about. If it's up significantly or down significantly to the level, and if it's a technical level that goes back for at least multiple months, uh, the better, the longer the trend line or the level has been around for many years, then the more significant it is. Like for instance, on gold, these levels right here, these levels go back since some of them goes back since pretty much 1980, and it's never broken out that level before. So that level is to be trusted until proven otherwise. So what you want to see as a bull is a breakout of 4,500, potentially going to as high as 4,800, and then potentially pulling back sharply and retracing that area before potentially going higher. But right now, it looks like it's topping out. RSI for multiple time frames, monthly, weekly, are all overbought. So daily, it's coming back. I'd probably wait to buy a little bit heavily on gold and silver if it once one day the daily chart goes into oversold territory. So if we get more sell off in the coming days, weeks, and months, then that could potentially do that to the relative strength index, also known as RSI. All right, so that is pretty much it, guys. Wait, did I talk about the dollar? Right. So the dollar is below the trend line. So this one is still unconfirmed for in this video. So meaning it could still get back above 99.61. The question is if it gets back above, it might actually have a shot of breaking out again. If not, then this thing could still keep going lower. This is the breakout zone from last breakout of this inverse head and shoulders right here that formed. It did retrace, got back above, retrace a little bit, went higher, and if we do keep going lower, a test of 98 around 98.16 would be a major test. If it breaks below that, then watch out below. It could go to 96.45 very quickly, but trust the level until proven otherwise. And the US 10-year yield, it was spiking last week and it's also forming inverse head and shoulders right here, which could give it a 5.90% boost to the upside. So it's also bull flagging here. So up move, sideways consolidation is a bullish pattern on top of the head and shoulder, inverse head and shoulder, which is another bullish pattern. And to measure that, you just take basically a measurement from the low to the neckline, and that's how I came up with 5.90%. All right, guys, I hope this was helpful. Feel free to follow me on TikTok for more videos like this. I will be including the link down below to my TikTok page, my Facebook group page. Also, if you're trying to start investing today with your own capital, you can sign up using my link on Robinhood. We will both get a free gift. And also BTCC if you're trying to trade futures for crypto, or if you're just trying to trade stocks, crypto shares, you could do that too. So you could either trade futures or shares on there. They have forex as well. They have commodities like gold, silver, and they also have stocks for futures. And if you don't want to start trading with your own capital, that's okay too. You guys are more than welcome to check out the prop trading firm that I currently use right now. So basically, the firm is going to have you do an evaluation base. And once you pass that, then you can get at least, I think, 80% profit split on your gains, up to 90 or 100%. So feel free to do your research. Feel free to check it out. I will be including the link in the description down below. Thank you guys for watching. I will see you guys next time. Bye bye.